Popping. What up, people? Happy Saturday. Kamari Ellis here with the Finance Rebel Show. Today is Saturday as normal and usual. What we do every Saturday is we talk about money. We have our wealthy conversation every Saturday. And this Saturday, I wanted to do something that I was inspired by one of the community members here, Jose, but I wanted to talk about my new dividend strategy that I'm working on here. And I think dividends are a great way of illustrating the power of compound growth. So that's one of the reasons why I wanted to talk about it today. See, you got a couple new people on today. Oh man, my man Eddie Colson's on. Eddie Colson down in Baltimore. What's up, Eddie? Les Live. Welcome. As we're waiting for everybody to come on, just want to say my welcomes. I'm a little delayed today. My apologies. Technology's been fighting me. The algorithms don't want me to be great. But guess what? I'm going to be great no matter what. It's not up to anybody or any algorithm or any computer program. It's up to me. So I choose to be great. So we're going to be great. All of us together. As we're waiting for everybody to come in and join the pews, gather in, share this out with somebody who's interested in growing their financial IQ. Share this out with someone who's looking at learning the basics, but also learning a few sexy things as well. Hey, Nicole, how you doing? Welcome. Happy Saturday. All right, so I see some of the folks starting to come in. Oh, man. So I'm going to share this with y'all. I want to ask y'all a question. What's y'all thoughts about Bobby Brown? God bless the dead. God bless Whitney Houston. Whitney Houston said Bobby Brown was the king of R&B many years ago. I was never able to agree with that, but my brothers over at Bada Hood, Jimmy and Corey, who are tapping in with me right now, are really upset that I said that, because Jimmy especially feels that Bobby Brown is and was the king of R&B. I say crack is whack, as Whitney made so famous, because Bobby had a great run. Bobby definitely had a lot of talent. Bobby should have stayed in New Edition. They should have figured out the way to make that work. They should have figured out a way to make that work, right? If y'all know I'm always talking about black wealth. If y'all look at New Edition was the blueprint for the modern day boy band. Now, many would say the Jackson 5, and to a certain degree, that's true. However, New Edition spawned the likes of New Kids on the Block. I want to say NSYNC, many others. They're managers. The managers of New Edition basically cloned their system and took it to all the other boy bands, white boy bands, right? So as usual, the black artists always paved the way. But again, I think if they would have stayed together and brought Johnny Gill on, they could have made, they could, I mean, they did, don't get me wrong. New Edition is a staple in black culture, without a doubt. But Bobby wasn't the greatest of all in New Edition, in my opinion. All right, so Bada is here to slander me today, y'all. But I want to know, what are y'all thoughts? Is Bobby Brown the king of R&B? Was Bobby Brown better than everybody else in New Edition? Who was y'all favorite person in New Edition? All right, so Bada Hood says he had a short run, but he was the king for a very short time. Reminds me of a Biggie lyric: your reign on the top was short like leprechauns, as we crush so-called Willie thugs and dapper dons. But, I don't get it. So Corey has joined in the battle. I have a running joke that's very, very factual, right? Anytime I say anything bad about Jimmy, Corey is right behind him to mollywop me. So they always jump me together. But we family, so they can do that. Listen, I will say this though about Bobby Brown, because this is all jokes, right? The pain that brother has gone through over these last several years, one losing his wife, the other losing his daughter, and then recently losing his son, is tragic. So, never want to slander Bobby Brown. I mean, that man has seen more pain than any of us probably have seen in the last couple of years that we've seen in an entire lifetime. All right, so Bada says if he stays with no addition, we don't get Don't Be Cruel. I'm cool with not getting Don't Be Cruel. We could have got some more of Can You Stand the Rain? Corey says I'm a hater. Not a hater. I just call the facts the way it is. Right. Thank you, Leonard. Bobby Brown wasn't the king of R&B. And when Whitney said that, Luther Vandross was still alive. I mean, come on now. Mike Jackson was still alive. Bada says on that album, he had 5 songs running. That was Don't Be Cruel, My Prerogative, Brony, Rock With You Every Little Step. That 5-star run is absolutely insane. Listen, Bobby Brown's best song, his 2 best songs was On Our Own, the Ghostbusters from the Ghostbusters soundtrack, and the song he did with Ja Rule, Thug Lovin'. That old album, I'm cool with it. I'm cool with it. All right, so listen, y'all, let's get the show started. And I'm sure y'all tired of hearing my shenanigans with my brothers over there at the Black Wealth Project, the Bible Hood team, Jimmy and Corey. By the way, the Black Wealth Project airs every Sunday at 7 p.m. Tomorrow we'll be talking about banking while Black. Again, banking while Black, all the issues, trials, and tribulations that Black people face while banking while Black, and what we can do about it. What we can do about it. Oh, okay. My man Jimmy, Bada it comes through. So he got $5 on me. He just gave me $5 in the super chat. Appreciate you, Jimmy. Now that I got those thoughts off, I'll send you something. All right. Appreciate you, sir. Appreciate you. I got to get over to one of y'all live so I can give you a super chat as well and reciprocate. All right. So listen, y'all, again, this is the Finance Rebel Show. Today's segment is our Wealthy Conversation segment. We are talking about my new dividend strategy that I have been starting to work out, inspired by Jose. If anybody knows Jose, he's here usually every week. I'm sure he'll be here at some point today. But Jose definitely inspired me to think a little bit deeper about this dividend strategy. Call it the snowball effect, right? But dividends can be used a lot. Now, as I talk about this a little bit more, I want everybody to be very, very cautious when picking their dividend stocks. Don't just pick any dividend stock. Don't just pick a dividend stock just because it has a high dividend payout, right? That's called a dividend trap, because there's some dividend stocks that are out here that pay a great dividend, but they're absolutely trash. So you definitely have to be aware of that. You have to be cautious of that. I don't want to see anybody lose any money unnecessarily when doing this. And by the way, as we go through this, these are all my thoughts. This is what I'm doing. I am not recommending anybody to do this at all. Again, these are my thoughts, comments, and concerns. This is for education and entertainment purposes only. This is not investment advice, all right? Before you seek to buy or sell any securities, please consult with your investment and or tax advisor, all right? Because past performance is not an indicator of future results, all right? So a few more people are in the building. I see Alton. What's up, Alton? How you been? Angela's here. Welcome, welcome, welcome. Robbie's here. How you doing? All right, Leonard says, as a musician, we know great producers can put you over the top. Absolutely. Teddy Riley was definitely responsible for the success of Bobby Brown. All right, Don Johnson's in the building. What's up, Don? Jamal Jackson. What's up, brother? I think this is like one of your first ones. One of your first ones. All right. Don says, like, prison stocks always have great dividends, but I can't invest. Right. So I'm glad you said that, Don. I hate prison stocks. I cannot knowingly participate in the unhumane treatment of folks, especially the unhumane treatment of Black folks, people of color. We know prison stocks are like that. Again, prison stocks, I believe, are the spawns of the devil, but they pay a very, very high dividend. But again, my integrity, my character won't allow me to knowingly put my money into something that causes harm. All right. Integrity is key for me, y'all. Integrity is everything to me. I know a lot of people don't really care about integrity. We put money, we put the bag over money a lot of times, and that's really, really sad, right? People over profits always. That's my mantra. That's how I live it. That's how I rock it. All right. All right, my man. My man. Okay, good. All right. Work kills you. All right. Well, make sure you take that money that you're working at work and make it work for you. There's no need in working all the time just for the sake of working. Make your money work for you. All right. Emsley and Co. How are you? Welcome. Welcome. All right. So as we get busy, right? Our normal stock market rundown, the S&P 500 closed this week at 4,229 points. Again, 4,229 points. Closed up year to date 12.61%. So the market's still doing good. The S&P 500 is kind of what everyone uses to judge if the market's up or down, right? The S&P 500 is the 500 largest stocks in the United States. A lot of them, however, are also multinational companies that have businesses all over the world. Okay. Oil was up $69.37. So $69.37 per barrel of oil. We're definitely see oil run. Oil is now up 43% year to date. And we're starting to see oil prices leak into gas prices because they normally go hand in hand, or at least very close. And gas prices are up. I know where I'm at, they're up over $3 a gallon. So that's hitting my pocketbook, hit my wallet as everybody starts to take their vaccinations and get their vaccine juice. They're starting to travel more, get out more. So it's expected that oil's going to go up more. It's already going up more. And it's definitely expected for gasoline to potentially go up more. Now, gasoline may start to level out because we saw some of the refiners. We saw some of the refiners go offline for Texas, and because many other refiners got hacked. Ransomware is no joke. The hackers are out there getting busy. So don't forget to protect your stuff. All right. Gold. Now, last time we talked about gold, last week, gold was above 1900. Guess what? This week it's below 1900. So gold closed out at 1,894. Again, 1,894 per troy ounce. All right. It was down about 0.9% or 1% on the week. So gold's been kind of all over the place. If you pay attention to that, the market is really trying to find its bearings, right? Because we're seeing stock markets starting to move. We're seeing the bond markets move. We're seeing crypto move. We're seeing gold move. Now, usually they all kind of have their own characteristics. But normally, when stocks are up, bonds are down. When stocks are up, gold may be down. But it seems like everybody is trying to figure out where they want to go next. So it's going to be really, really interesting. All right. Bitcoin, 36,161 bucks. Now everybody's mad at Elon Musk. I know what I call Elon, right? Y'all call him Mr. P.T. Barnum. But Elon shared some kind of meme, and Bitcoin fell a couple percentage points. But as I've always told y'all, Bitcoin is very volatile. So don't get shook. Just do what's best for your portfolio and your overall financial position. All right. Now, can anybody tell me where the Dogecoin rocket is? Because I don't think it got to the moon yet. Like, I know everybody was waiting for it to go to 1%, or excuse me, $1, but it's still at like 37 cents. So Doge right now is at 37.374498. So roughly 37 cents. It hit a high of, 70 cents, 71 cents, something like that. And then it fell. Again, many people were mad at Elon because he talked about Doge. And people feels like he made it fall. I don't think Elon did it. He might have helped it, but I don't think he did it. So it's very, very interesting. Now, everybody's talking about AMC. Anytime you see these stocks get a lot of attention, beware. Be very, very cautious. All right. Because a lot of people, when you see a lot of people jump into a thing, especially a lot of the Reddit people jump into a thing who are not professionals and that are putting all their money into it just as a gamble, even though they don't call it a gamble, they call it an investment, be leery, be very, very leery. So I wanted to show this clip real quick before we got into the thick of things, just to hear the commentary of some people who actually do this for a living. All right, so give me 1 second as we transition over. I wanted to show this brother talking about AMC and the signs of AMC getting weary.
Thanks. Bounce the trade idea off my firm. They don't get.
And of course, we have to watch the commercial because everything is governed by commercials these days.
Speaking of,
Trade up to Schwab. The gut check you want, the intel you need.
Welcome to Trading Nation. I'm Seema Modi. Another wild day for AMC. That stock reversing higher after plummeting earlier Wednesday. The company filing to sell 11 million shares, cashing in on a parabolic move this year in order to service its debt. One out of the ordinary tidbit in its SEC filing, the company warning investors in its stock to be prepared to lose it all. Let's bring in Matt Maley and Miller Tabak and Delano Sapru of New Street Advisors for more on these unusual moves, Delano. We were thinking that maybe the meme stock trade was over back in March, and here we are once again watching these memes move to the upside and to the downside.
Yes, but it's really hard to get control on actually what's going on. I mean, you reversed higher after the news of the offering, and then stock dipped when we're now back above water on the day. So, it's really interesting. We thought that this was over, and really it's not, as far as the crowdsourcing ideas from what you call it, retail traders or Reddit traders. So I think for myself, my clients, I've stayed on the sideline on this, but as a spectator, it's really interesting to watch. And I think that this is not going away. You're going to see more of these crowdsourcing of ideas, and a lot of research is being done. Now, evaluation obviously doesn't make sense from a fundamental standpoint, but if you're looking at the whole meme space, there's some other areas and names that I like, and I think that there's some plays in the EV space. So you look at a stock like NEO, that's one that hasn't really recovered from the highs of trading about $66 a share earlier this year. So that's what I really like, and I'm watching. I think there's a lot of tailwinds that would benefit a company like NEO.
Meme name is often seen as a speculative bet, Matt, but can you apply technicals to a name like AMC that has been moving all over the place over the past couple days?
Well, it's very hard to, because these moves are so dramatic. And to be honest with you, I just think it's a sign of froth in the marketplace. I mean, we've seen this, huge amount of liquidity that the Federal Reserve has provided over the last year or so, and they've been telling us more recently that they're going to, taper back on that, and in fact, especially in the last couple of weeks. And they're indicating it may come sooner than people thought. As that liquidity becomes a little less plentiful, some of these stocks that are trading far beyond any of their fundamentals, I think it's going to be really rough. And if you look at a chart just on AMC, I mean, the stock's had two rallies of over 700% in 4 months. I mean, the total rally, it's up, 2,500% a year to date. I mean, this is not a company that's going to, cure cancer or come up with the next technology that's going to change the world. I mean, and then you see its RSI chart, it's gotten above 90, into the high 90s twice this year. Most companies don't happen 2 times in a decade. So this is just, I think, it's a speculative fervor. It just shows how speculative things are, and they're going to come down, and it'll have an impact on the market. It's not so widely involved in the marketplace that it'll cause a serious crash, but it will cause a pullback on the market, and that'll be good and healthy, because what's going on right now simply just is not healthy, in my opinion.
See where it goes from here. Matt and Delano, thank you for joining us today, and thank you all for watching Trading Nation. I'm Seema Modi. See you next time.
So y'all see it, folks. Y'all see what they're talking about. It's very, very interesting. I don't know. He dropped a couple of terms here. Frothiness, right? Frothiness was one of the terms he dropped. So if any of you all have ever made coffee or hot chocolate, the froth is the cream or the butteriness at the top. They're basically saying that this stock has kind of gotten ahead of itself, right? And there's not a whole lot backing it. I feel like, again, everybody's kind of running behind this. When you look at some of the Facebook groups, some of the Reddit groups, everybody's excited about this. So what I always say is, if you got profits, take some profits, because as I said, this stock has run at least twice in the last 4 months, more than 7,000%. Now, here's the thing. The trend is your friend until the end, right? So I wouldn't short this. Y'all might see me ask the question about shorting it, but I wouldn't short it right now. I would stay out of the way. But if you jumped in and you made a couple of dollars, be sure to take some capital off the table so you can secure your profit. All right. Remember, nobody ever goes broke by taking profits. Nobody ever goes broke by taking profits. I told some of my friends who were buying Dogecoin, got it at like 2 cents, made money up in the 70s. I said, take your profit back. They put a couple grand in. They're like, nah. Now they're mad because they didn't take any profits. So, it's part of the discipline when you're in this thing called investing, not trading, but when you're in this thing called investing, you got to be wise, and you need to have some discipline and some process and rules behind you when you do this thing here. All right. So as we get moving, right? As we get moving, what do y'all think about AMC and all the other companies that are running because of the Reddit crew? Do you think it's a good thing? Do you think it's a bad thing? Do you just think it's a thing? Now, what is playing here? Nothing's supposed to be playing here. Oops. Sorry, y'all. So, yeah, tell me what you think. Tell me what you think about this. And as we move on, I got too many windows open that are just playing randomly now. But welcome to everybody who just joined. If you're just joining, my name is Kamari Ellis. This is the Finance Rebel Show. Every Saturday, we do wealthy conversations starting at noon-ish. Today, I had super duper technology issues. Again, I think the algo gods don't want me to be great, but it's not up to them. It's up to me. So we're going to continue to be great. We're going to continue to be here. All right. So listen, y'all, I am employing a new strategy. It was inspired by my brother, Jose, who was always here, usually with us every week. I'm not sure if I saw Jose in the chat or not today, but Jose is usually here with us. And Jose, a couple weeks ago, jumped on with us to present about black stock companies here. We talked about that, and we talked about what's good and what's bad. And Jose started talking about one of his stocks that he's buying that he likes to implement what's called the snowball effect, or what we call the dividend snowball effect, which is basically where you buy enough stock in a particular company where at one point or another, the dividends that you reinvest can begin to start buying the individual stocks for you. So it's like a perpetual stock buying generator, to say the least. All right. And so I said, you know what? I'm going to start doing some of the same things. Now, I've talked about some of the stocks that I buy here. Again, this is not investment recommendations. This is not investment. This is not investment advice. This is just me sharing my stuff for entertainment value, for educational value. So everybody can kind of have, an idea of what some other folks are doing that at least have some professional experience. There are a lot of so-called stock market gurus, investment gurus out here that have just started doing it 5 minutes ago. I've been around for about 20 plus years. So I don't say that to brag. I say that I put in the work, the blood, sweat, and tears. And yes, there was a lot of blood going on with this. But one of the stocks that I've been buying a lot is AT&T. And, again, I wouldn't say a lot, but I've been buying a good share of it. And so I started thinking about what Jose was talking about with employing the snowball effect, the dividend snowball effect, by basically buying enough shares where you have enough shares where the dividend will pay for buying more shares. It's the ultimate dividend reinvestment plan. And before I go any further, the other reason I'm always intrigued by dividend stocks is partially because of my dad. Now, my dad years ago used to have, what stock did he have? He had General Dynamics, and he would always get these checks that would come in the mail. And he never reinvested the dividend, but I was always fascinated by these checks that came. Talk about mailbox money. They came all the time. And I was, again, very fascinated. And I asked him, like, when I got older and started to learn, like, why you never reinvested the dividends, Dad? Because, all you're doing with it is putting it in the bank and the bank isn't paying that great of an interest rate. You would have gotten more out of it by just reinvesting the dividends and buying more stock as you went along. And so he said, well, I never thought about it. I never knew you could do that. I never knew you could do that. So, I always find it interesting when we talk about this thing called investing in the stock market, because it's endless the things that you can do in there. But I always preach having good fundamentals, because with good fundamentals, you can do great things. All right. So again, with good fundamentals, you can do great things. That's why I focus on the fundamentals here. To me, dividend investing is basic. It's the basics, right? It's a good fundamental, though, to understand about the markets. But what is a dividend? A dividend is money that the company pays to their investors. Now, usually it is part of the profits that a company will pay back to the investors for being part of the ownership group. Because again, when you are an equity owner, a stock owner, you are part of the ownership class. All right. You own part of this company. So you are entitled to a portion of their profits. And so, again, that's again part of the overall basics. And I always again like to go back to the basics because it's fundamental. Now, again, like I said, I've been buying AT&T. So let me put AT&T up on the chart here. I bet to put up AMC here. Just as a quick aside, has anybody seen what AMC's price has gone down to at this point? It's not at that $60 level from that video. It's more like at $47. All right, so AT&T right now is trading at $29.27. Again, let me blow up the screen so everybody can see it. My apologies to everybody that's listening on the podcast replay or listening on Instagram Live. My apologies, because I know you can't see this, but again, I will do my best to talk through it and articulate everything that's going on. So right now, I'm looking at AT&T. I've been buying shares of AT&T, and I've been sharing with y'all publicly. Again, this is not investment advice. And so AT&T is a $208 billion company. The market cap, or the market capitalization for AT&T, is $208 billion. So this company isn't going anywhere anytime soon. AT&T pays about a 7% dividend right now. All right. So for every stock that you own, you'll get $2 cold hard cash, and a dividend payment every quarter. Excuse me. Let me back up. You'll get $2.08 for each stock you own for the year. All right. And that dividend payment is divided by 4. So that's what, roughly 52 cents a quarter. Let me go to the calculator real quick. Yeah, it's 52 cents. Wow. So 52 cents a quarter you'll get. And what a lot of people do, and what Jose was talking about, was having enough shares, owning enough shares that you can take your dividend, instead of taking it in cash, you can reinvest the dividend. So you don't have to take it in cash like my dad did. You can take that stock payment and reinvest it back into the company. All right. So if you add up those 52 cents enough, you can get yourself a share. All right. And so again, they pay a 7% dividend. Now, one of the reasons why I like AT&T is because they one of the biggest cellular phone carriers in the country. All right. They also are going to be major when it comes to the 5G rollout when it comes there. Now, AT&T is not perfect, though. They keep buying these media companies that really are not a good fit for their business, and then figure out ways to sell them off later on, which they're trying to do now. So they brought Time Warner, which owns HBO. They brought DirecTV, and now they're looking to spin them off. So again, they haven't made a lot of the best decisions in terms of their merger and acquisition strategy. However, AT&T is a staple in the cellular business, and they're not going anywhere. And let me know if y'all think mobile phones are going away. I don't think so. But now when we look at AT&T, right? AT&T, Last year, when a year closed, they made $171 billion in revenue. So they generated $171 billion in revenue. That's a lot of money. And their profits were, again, I'm sharing this here, their profits were in 2020, again, that was the year of COVID, they had a net loss. They had a net loss of about $2 billion. But I don't believe that they'll continue to have losses. That's one of the reasons why I'm buying them. And again, they're paying that heavy dividend. I don't think they're going out of business anytime soon. Anytime soon. All right. And so that's why I'm looking at this company. Again, like I said, you never want to buy a dividend stock just for the sake of the dividend, because again, AT&T is paying a pretty hefty dividend, but I believe they're a company that has plenty of access to cash. And they also have plenty of access to credit. Okay. They can go to the bank and get whatever they want. Let me see here. How much cash do they have at hand? Let me just share that real quick. Give me 1 second, folks. 1 second. Move the screen. Oh, here it is. I got too many tabs open, y'all. Got way too many tabs open. So when we look at their financials, like I said, they made $171 billion, but how much cash do they have on hand? So at the end of the quarter, when we look at the end of the quarter, let's see how much cash they had on hand. They got over $11 billion in cash. Over $11 billion. And I'm sure their free cash flow, the money that they bring in every month out of everything from their cell phone sales, their streaming sales, their equipment sales, any investments they may have made, their cash flow, I'm pretty sure is positive month in and month out. So again, I think it's a stable, well, not I think the facts show that it's a stable company. It's definitely something I've been interested in for a long time. And guess what? Guess who my cell phone carrier is? AT&T. And I always tell folks to just starting, buy what you know. If you're brand new to investing, start buying what you know. Now, that's not the end goal. That's not the end strategy, but it's a good place for you to go, because normally if you're really fanatical or really like a product, chances are that other people like a product too. Chances are it can potentially be a good investment. Potentially. Doesn't always work out like that. But again, I think it's a good place to start. Good place to start. So again, I've been looking at this AT&T. I've been kind of playing around with it here or there, buying a little bit there, buying a little bit there. But now, again, like I said, Jose kind of inspired me to look at doing more. So I started looking at it and I started playing with the numbers, as I always do. And I broke out my Google Sheets. And so right now I have like 16 shares. All right. Not a whole lot. Not a whole lot at all. But I started to figure out, all right, so if I have 16 shares at the current price, it's $29.27. And I went back over 10 years and I looked at the median price, not the average, right? Because the average will get you a little wacky pricing. And I'm not trying to throw a lot of statistics at you, but I went back and I looked at the median price, which, by the way, you can pull down a whole bunch of historical data where at finance.yahoo.com. So I took all the prices and I did a median. I found a median range for it, the median range for the price. So that's about $34.56. So $34.56. So if I could start buying around that median average or below, to me, that's good money. So again, the median average is $34.56. I've been buying at like 29, 28, 27 bucks. Right now, again, you see here on my sheet, let me blow that up a little bit. You see here on my sheet that it's 29.41, but as I showed you on yahoo.finance.com, it's 29.27. Okay, so it pays a dividend of $2.08 every year. All right, so if I want to get enough shares to buy one stock every year, I need 17 shares, right? Do y'all think that's doable? So it's 17 shares. That'll buy me one extra stock for a year. And so every year, again, keeping that the price stays the same, right? I don't want to get too overly complicated in the pricing and the math because I want everybody to follow. Again, this is the power of compound growth. But every year, without me doing anything else, without me doing any more investing, putting any more money into AT&T, I'll at least get a share or two. Now, like I said, the median average over the last 10 years is $34. So that's what I'm planning for. So if I can get enough shares in to keep buying for me automatically, this is like investing autopilot right here. This will help. This will help me go a long way to reach my goal of financial security. So again, 17. Now, if I want to buy a share every quarter when the company pays a dividend, I need 66. I need 66 shares. Now, like I said, right now I own about 16 shares. So for me to get to that point of getting a new share every quarter, which is 4 shares a year, I need 50 more shares. And so I kind of just laid it all out here. I need 50 more shares. All right. Now, again, I started playing with the numbers even more, right? Because that's what I do. Now, what would happen if, because again, let me go back to the sheet here. That's about $1,700 all in. Some of y'all have 1,700. Some of y'all don't. This strategy can be implemented for anybody. Whether you can buy 1 share, start with 1 share at $29. If you have $1, you can do fractional investing, right? If you got 10 grand, you can throw it in. I recommend everybody start slow though. Start with $25 a pay, $50 a pay, $100 a pay, and do what's called dollar cost averaging. Okay, dollar cost investing. Start slow. All right, your investment journey does not have to be jumping all in with 2 feet. Just dip your toe in. Start slow. Start to learn the market. Start to learn the company that you're investing in. All right, again, start slow. That's what I tell everybody, start slow, because everybody thinks you need a whole lot of money to begin to invest when you actually don't. You don't need a whole lot of money. You need $1. Now, some people don't like that strategy, but I'm going to tell you why I like it. Because many people are intimidated. And again, I'm having technical difficulties right now. I'm trying to switch screens. But many people are intimidated by the large amounts of money you can have, or that you need to have, or that people think you need to have. When in actuality, if you take $1 that you might have spent on a candy bar and just invest it into some stocks, that would be a better use of your cash. If you took $10 and foregone, that Happy Meal that you're going to get at a fast food place, because Happy Meals are no longer $3 or $4 anymore. You can spend like $10 on a Happy Meal or on a dollar menu these days and put it into a stock. You now have ownership. You now have an asset that has the ability to grow. You now have given your money an opportunity to grow. When you spend it on some consumer item, random or not, it's gone. It now went to making somebody else rich. And listen, a lot of people want to talk about the 1%. Well, part of the reason why the 1% is the 1% is because they give their money the opportunity to grow. You have to put your money in a position to grow. We don't necessarily have to catch up with the 1%, but the gap doesn't have to be as wide. It doesn't have to be as big. So we have to get in the game. You're never going to be able to win if you never get in the game. We talk about Hank Gathers. Hank Gathers was I talk about basketball a lot, right? But Hank Gathers was a big time basketball star from our town. And what did he say? He said he would shoot 1,000 jump shots just to get his free throws together. 1,000 free throws. So he practiced. It was work. Yes, we're talking about practice, folks. Practice is a thing. Practice is a good thing. Basically, you got to get in the game now, right? You shoot those shots for when you get in the game. Your muscles are firing off. Your coordination's working right to do it. You got to start somewhere. So at the end of the day, you got to get in the game. So again, you can start with $1. You can start with $10. You can start with $100. You can start with 1,000, 10,000, $1 million. The thing is, start where you're at and start with what you have. Doesn't matter what you have. It only matters what you start with. Only matters that you get started. That's the big thing. That's the big thing. So again, like I was showing y'all on the screen here, as you get more stock going, you can pick a stock. It can be, there's other stocks out here, right? They pay a great dividend. There's also a thing called ETF that we talk about a lot, exchange traded funds, which are basically a basket of stocks, right? There are baskets of dividend stocks. All right. Vanguard has one that's pretty impressive, right? Let me see. I'll put that up on the screen real quick. Vanguard's is VYM. One of Vanguard's is VYM. All right. So instead of picking one, if you have no idea which one you want to pick, which one you want to start with, you don't have a clue. Again, you can start with an ETF. Now, let me just show you this one right here real quick. As y'all know, I got way too many tabs open. So give me a second. Give me 1 second. VYM is an ETF that Vanguard manufactures and puts out to the market. Now, Vanguard, guess what stock Vanguard has that I was just talking about, that I'm buying? Vanguard also, in this stock, VYM, they also are buying AT&T, just like I am. So I'm investing just like I'm investing just like Vanguard, rather. So when we look here, let me blow this up so everybody can see. And again, my apologies to everybody that is on the rebroadcast on the podcast and also watching live on Instagram. Just taking a look at Vanguard here. Again, the ticker symbol for this, and this is not an investment recommendation. These are just illustrations for the educational portion of this broadcast. All right. So Vanguard, VYM, the name is called the Vanguard High Dividend Yield ETF. High dividend yield. You can buy that anywhere. You can buy it on your Cash App, your Robinhood. You can open a brokerage account with TD Ameritrade, E-Trade. You can get it anywhere. All right. It's not that hard to do, folks. Not that hard to do. So over the last, this pays about a 2.61% dividend. So it's not as sexy as AT&T, but guess what? It's done pretty good. Now, before the show, I did all these what they call hypothetical investments. So over the last 10 years, this ETF has performed better than AT&T. I'll come back and talk about that another day. Because like I said, I've been having technical difficulties today, so couldn't bring everything up that I wanted to bring. But the top 10 holdings in this portfolio: JP Morgan, Johnson & Johnson, Home Depot, Procter & Gamble, Bank of America, Comcast, ExxonMobil, Verizon, another cell phone company, right? Intel, AT&T, right? So these are all pretty big dividend stock companies or dividend paying companies. So again, if you don't like the AT&T, if you don't have any idea which way you want to go with it, you can pick an ETF. And again, I do like Vanguard ETFs because they're low cost. You have to be very, very careful about your investments and the fees you incur with your investments, because your fees will eat up. The fees will eat up your investment and you won't even realize it. You won't even realize it. So again, just want to go back to my spreadsheet here, because again, you can start small. Again, you can start big, right? It doesn't really matter. The biggest thing is, again, you getting started. That's what matters the most. But like I said, you want to put your wealth on autopilot, get some dividend stocks, keep investing in them, and put them on autopilot and reinvest the dividends. It will make you a lot of money in the long run. And so here, if we just look at what I have right now, right? getting to 50 shares. Okay. Or that's what I get to the 66. But if you got 50 shares, right? If you start it right now, you could expect from the dividend payments that you're getting for the rest of the year to get at least 2 more shares. All right. And then we go forward the next year, you'll probably get at least 3 shares. And then it'll keep growing and growing and growing. And this is just, I just put in there what you needed to buy, 50 shares. So that was 1,500, right? A little over 1,500 bucks. Now just take that out about 10 years. 10 years on autopilot, you'll have 88 shares. All right. And you'll have about 2,700 bucks in there. But again, what if you do more? What if you do more? You don't have to just stay at that level. You can do more. What if you start with 100 shares? What if you start with 100 shares? So at 100 shares, it's roughly a $3,000 investment from what I have now. And at the end of 10 years, it will be fine. You're not doing anything else. And at the end of 10 years, it'll be about 53, almost $5,400. $5,400. Not doing anything else. Now, that's not what I'm going to do. I'm going to put my money in and get to a certain level, and then I'm going to continue to dollar cost average into this. That's how you really, really run the bag up. And I'm not going to worry about the price that much. Only thing I will worry about is like AT&T does something like really, really major. If they have a major management shift, if something in the economy changes or the political system, for example, let's say the United States government says, we no longer want cell phones. Now, I know y'all probably saying like, that's wacky, that's weird. Weirder things have happened. All right, we no longer want cell phones. We're outlawing cell phones. So AT&T might go to the can, right? It might not be a viable investment anymore. So yes, you have to keep out on the lookout for that. That can happen. However, probability of that, slim to none. But it can happen. It can happen. All right. So, all right, folks, that's all I have for today's presentation. What comments do you have or questions do you have? Let me jump into the chat real quick. I see some people are on. Let's see here. Oh, Thad's on. What's up, Thad? How you doing? All right, you got time today. Let's build, my man. All right. Samuel Lynch is on. How are you? Curtis Davis is here. How are you? How do you find out if a dividend, how do we find out if a REIT is a prison stock? All you got to do is read the summary, right? So if you go to finance.yahoo.com, you put in the ticker symbol of this REIT that you're looking at. Look at their profile. It'll tell you right up front. The reason why prison stocks can qualify as REITs is because they own a lot of land and they're paying out 90% of their profits to investors. No, it sounds sexy, but to me, there's no amount of sexiness to justify jumping in with people that are murdering folks, people that are raping folks, or at least knowingly let this happen. All right, so Curtis says, I'm steering my people away from ANC. My client made 10K. I recommend to sell on Wednesday. Curtis, what do you do? Are you a FA? I didn't know you had clients, Curtis. Yeah, I don't, sell. I take profits. Just because the stock moves up does not mean it's good. That's true. I recommend everyone take gains, put it in solid stocks like Apple or Microsoft. All right, AMC doesn't fit my portfolios. Oh, now Don Johnson just said a whole word. I don't know if y'all won't catch it though. So let me break it down for a minute. AMC does not fit my investment strategy. So what you have is you have a lot of people that see what I call financial porn, the media. Financial media is like porn, right? You see folks doing all kind of tricks that regular people don't do, that people that are paid, that are not paid actors, right? People that are not paid actors don't do, right? But they just follow along. They follow along whatever the media is telling you to do, and they do it. All the while, they don't know if it really works with their strategy because they don't have a strategy. If they had a strategy, it would be a different scenario. All right. So Curtis says at first it was a good thing, but people want to keep gambling mindset, not shift to investment mindset. Yeah, I personally feel the whole Reddit community was gambling mindset from the gate. When their whole premise is that their whole premise was that they want to fight the hedge funds, where hedge funds were getting paid with AMC and GameStop all along. I think it's a little goofy because they're getting rich. You're helping the hedge fund people get rich. All right, what's up, Chili? How you doing? All right, yes, AT&T slashed the dividend. They did, but they're still paying. By the way, the board of directors makes a decision to determine your dividend or not. All right, they're the ones who determine whether or not the company is going to pay out the dividend. Doesn't always come automatically. You will see companies that will shift from time to time, cancel their dividend or delay their dividend or suspend their dividend. All right. So I want y'all to know that. If the method is understood, it's cool short term, but there are a lot of novice investors that only focus is quick lick. Okay, I think Dad is talking about AMC. All right, what do you think about monthly dividend stocks? They're cool. The same principle applies here for monthly dividends. You have some ETFs that pay out monthly. One of my favorite ETFs is PFF. Hey, Jose, I was just talking about you. But one of my favorite ETFs is PFF. They're invested in basically preferred bank stocks. Oh, Don says his largest holding is VYM. Is his holding. Okay. That's dope. So again, it takes time, it takes discipline, it takes focus, folks. Don't necessarily jump onto a fad or a trend just because everybody's talking about it. Right? That young man or that young woman everybody's talking about in the neighborhood that everybody's dating isn't necessarily a good person to date, because a lot of times they got all kinds of diseases. And I'm going to just leave it at that. Y'all know what I'm talking about. Same thing goes for stocks. So you want to be careful about where you put your money. You want to be careful about what's going on. So, folks, any other questions, any other thoughts, comments, concerns? Is this strategy that we talked about today something that you want to work on or something that you find interesting? Now, while y'all are answering that question, I do want to show you something real quick. Where are we at? So I want to go back to finance.yahoo.com. Finance.yahoo.com. I'm going to share that on the screen. Shucks. Got too many things open, y'all. Too many things open. Jose, did you hear that I said you inspired me to do this? So AMC right now is $47.91. Other day, it was $60. So again, a lot of people have been jumping in on this. For what reason? I don't know, because they don't have a strategy. Just because it looks sexy and it looks cool and it looks fun. So on June 2nd, it was $62.55. Just dropped $47.91. Listen, everybody's talking about diamond hands. I get it. But should you try to employ that strategy with everything that you have? At some point, people are going to take profits. They're going to need to pull out to make cash available for various things. Some people are going to need to pull out for dividend payments to their investors. Like there's always something. That's why it's called the market. There's people buying and selling all the time. And at some point, people are going to be forced to take profits. The question is, do you take them on your time or do you take them on the market's time? At the end of the day, you want to take them on your time. And I'm not talking about timing the market either, folks. So please don't get it confused. I'm talking about taking profits according to your overall strategy. Like Don Johnson said, he has a strategy. A lot of folks don't have a strategy. Okay, so you plan to implement it. All right, but make sure you use it on something that is a good company, not just some company that's pop and fly today, that's fresh flying bold for the day in the headlines. It's a stable company, stable management, solid balance sheet, got plenty of cash. They generate plenty of cash and works for your strategy. So please have a strategy. All right. Yeah, it was your Coke strategy, yes. Yep, but I believe you also said you're going to start doing that with AT&T as well. Yep. All right, so Chili says he owns Ford and AT&T. Yes. So Chili brought up Ford because I've talked about Ford as well. By the way, since Jimmy was slandering me, Jimmy was one of the people that told me I was crazy for buying Ford. And where is Ford at now, folks? But I think Jimmy's going. He didn't like the Bobby Brown slander I was putting down. Yes, take profit on the schedule, right? When you see things going crazy, take profit, right? A lot of us are like, man, I got skills. I brought this stock and I made money. No, you got lucky. Let me tell you, you got lucky. You ain't got no skills. You got lucky. Guess what? I've been doing this for decades. I get lucky at times too. Sometimes I get my hat handed to me, but that's part of it. Like, if we're going to be honest about the situation, a lot of folks are getting lucky. Everybody looks good in the bear market. Bear market, we've been running since March 6th of 2009. That's how long this bear market has been going, folks. March 6th, 2009. Still pumping. We saw a nice little pullback last February, March, April, and then it ran again. But we've been in the up market. We've been in a bull market, as many of the fancy folks on Wall Street say, for over a decade. The question is, do you think this is going to continue to be the same? Do you think you'll be prepared when it's time for you to retire, right? I say financial freedom because I don't ever really plan on retiring. But let's just keep it honest. At some point, our body potentially is going to wear out and won't be able to do the same work that we do now. Even if all your work is mind work. Some days you might get up and you're like, I just don't have the time to do this today. I don't have the energy. What money will you have set aside, right? I mean, because at the end of the day, that's what I'm really talking about here. I'm just talking about a different strategy to get to it, so y'all won't be bored. At the end of the day, though, we got to put money aside and buy assets that accumulate in value. And no, gold chains are not an asset, right? Gold chains, jewelry typically is a terrible investment. Matter of fact, it's a disinvestment. It's a liability oftentimes, right? You got to have something aside that is going to take care of you when you get to that ripe golden age, or where you get to the age where you say, you know what? F it. I want to leave. I want to go travel the world. I want to spend time with my wife. I want to spend time with my husband. I want to spend time with my kids. And I don't necessarily want to have to change my life financially. Well, you get there by starting to prepare now. You get there by not spending all your money on trinkets today. You get there by living below your means. You get there by being a saver and an investor. Savings is just as important as investment. I know everybody's talking about investment these days, but savings is just as important as investing. You got to have a foundation to bounce off of to give you access to opportunities. That's what savings does. It will give you access to opportunity. And nobody in my audience, from what I know, is a trust fund baby or born with a silver spoon. So I get these pushbacks sometimes with like, savings suck. All right, let's stop it. The average American can't handle a $400 emergency. Again, the average American can't handle a $400 emergency. They stuck like Chuck up the river without a paddle. So again, stop buying dumb stuff, save your cash, invest your money, and get busy. And get busy, y'all. I did a video a while ago where I said, if you're buying Jordans and you don't own a pair of Nike stock, you're hustling backwards. Same thing. Put yourself in a position to be an owner and not just a consumer. All right. The economy works off of consumers. That's what they want you to do. That's how they make us all slaves. And I don't use that term loosely because I hate when folks say this NBA athlete who makes millions of dollars a year is a slave, which isn't true. But listen, we all have free will to spend our money where we want. I've shared a video where a gentleman who made $12 an hour all his life, had multiple kids, was able to amass $500,000. I can't think of his name right now. He was a parking lot attendant. I believe most of my audience makes more than $12 an hour. I believe most of my audience is smart enough to do some of these strategies. Again, financial porn, aka financial media, loves to make these things sound complicated and without reach or beyond reach. It's not true. Everybody who's in the audience today can implement these things. Whether you want to do real estate and do the Burke strategy, whether you want to do dividend reinvestment with stocks, you got to do something. Because again, just working all day long and paying bills ain't going to cut it, folks. So listen, y'all, be good stewards with your money, because when you're a good steward of your money, you can be a good steward with your life. All right. So that's all I got today. Let's see what other comments we got before I bounce out of here. All right, we talked about that. Chili says last year, Tesla, Twilio were 50% higher this year. Yes, different strategy. But that's even still more, you're still talking more about trading, Chili, to be honest. I wouldn't necessarily, like Tesla, in my opinion, is never a good investment. They're not profitable. Time in the market more importantly than time in market. Yes, time in market is more important than time in the market. That is correct. Being consistent with your savings and your investment amounts matter. All right. Yes. How do we change mindset to owners? I don't know. I try to do it every time I come on here. Right. People have to realize that corporations spend billions of dollars a year to train you, program you to spend money with them. The next time you rob Bob McDonald's with a kid, tell me what happens. And why do you think that happens? The next time you see a pair of Jordans and you say, man, I would like a pair of those. It's cool. Listen, I'll be honest. I've never owned a pair of Jordans. I could never afford one. I was a teenage parent. Couldn't afford one. Now I'm like, you know what? Maybe I'll buy a pair of Jordans. There are a couple that I like. What is that though? Like, if we're just being honest, that's brand. And I do like the design, but part of it is the brand. A major part of it is the brand. Can't lie about that. It's the brand. Those sneakers add no more or no less value than a pair of Vans or a pair of shoes from Payless. They're no more quality. They're not going to make me jump any higher. This black man can't jump anyway, so it don't matter. But you know, it's no more. But why do I want those if I'm just being honest with myself? Why am I even considering it? Because Nike is a marketing company first that sells shoes, which Phil Knight, the founder of Nike, has said out of his mouth. So they've marketed to me enough where I would think about plopping down anywhere from $150 to $300 on a pair of shoes. And we're not even going to talk about the resale value on some of these sneakers. For all of y'all who listen to the podcast, go and look up the Darren Miller podcast on the Finance Rebel Show. Again, the Darren Miller podcast on the Finance Rebel Show, where he talks about him reselling sneakers. But most of y'all not selling sneakers though. Now, if you're selling sneakers and you own Jordans and you're doing it for investment and business purposes, I say still own the stocks. So only half of my advice goes to you. But if all you're doing is buying the stock or buying the sneakers and you don't have the stocks, you're hustling backwards. You're hustling backwards. We will forever stay poor if all we do is buy depreciating assets that never generate us any income. It's a fact. But again, I said I was going. For real, I'm going this time. I appreciate you all. I will be back next Wednesday. Again, the Finance Rebel Show, our Wealthy Wednesday segment, will be on this Wednesday at 8 p.m.-ish. I'm gonna do better, y'all. I'm gonna start getting here on time. All right. And every Saturday we do our Finance Rebel Show Wealthy Conversation at 1 p.m.-ish. If any of you all want to stay in contact with me, want to stay in touch with all the offerings and all the content that's being put out, feel free to text me at 215-974-0058. Again, 215-974-0058. All right, everybody, y'all enjoy the rest of y'all Saturday. Y'all have a great day, and I will see you all soon. Later.